Warm welcome to everyone in the Hong Kong Machine Learning Meetup. It's a great pleasure for me to present parts of our work, parts of the research that we are doing here at the University of St. Gallen. We are located at the eastern border of Switzerland and have a very close proximity to Austria and also Germany, so in the heart of Europe. The last couple of days, there was quite some snowfall here, so snowy greetings from Switzerland. My name is Marco. I worked for nearly almost 9 years in my former life as a forensic data analyst at PricewaterhouseCoopers, which is one of the major accounting firms out there in the world. And it was quite an exciting time. I had the chance actually to be involved in quite some forensic investigations during that time. And currently, I'm a PhD student. I'm a third-year PhD student here at the University of St. Gallen. And my aim is actually to bridge or close the gap between the application of deep machine learning and financial statement audits. So this is what I'm aiming for. This is what I'm researching. Is what is driving me as a nerd in that particular field, which is quite cool. The work that I'm going to present today is actually a collaboration and a joint research efforts of a lot of colleagues that met along the way. Timur, former colleague of mine, currently working at the German Central Bank or the Deutsche Bundesbank. Anita, she's working at PwC now and did her PhD here in St. Gallen. Former colleague Christian, he's still working with the German Research Center for Artificial Intelligence, and Bernd Reimer, he's a partner in the forensic services practice at PwC, and last but not least, Professor Damian Bort, who is currently one of my supervisors while doing my PhD. Another thing that I'm really excited about is that Jendrik is also here today, because he has the tremendous task actually, or that's the challenge that the Noxit startup is currently facing, is to put a lot of the ideas that we are developing on the research side into production. And I know from experience that this is definitely an additional challenge on top of just doing the pure research. For example, detecting fraudulent journal entry postings in an ERP system in real time. I think this is a tremendous task to be resolved. And I'm equally excited to hear about the latest progress in that area from Jendrik later after the talk of mine. All right, and with that, let's jump into the topic of today. I want to speak about towards financial fraud detection in ERP systems using deep neural networks. So this is the I think the umbrella topic of my talk today. I will touch upon a lot of different research tracks and areas that we researched the last couple of years. Some of these things are still loose ends, so we haven't really, there are a lot of different paths actually, and we're learning on a daily basis more and more, but I'm more than happy to answer to the extent I'm able all your questions throughout the presentation. So if you have some questions, don't hesitate to unmute yourself or write the questions in the chat, and I will have from time to time an eye on the chat and try to answer the questions. All right, then let's start with a motivation, especially when it comes to fraud. We all know it's a continuing challenge. So there are two surveys that I briefly want to mention. One is one of my former employee, which is PwC, and they do on a bi-yearly basis so-called global economic fraud or crime survey. And the last one that was published 2020, one of the results of the survey was that approximately 47% of all the respondents said that their organizations have been victims of fraud in the past 24 months. So it's quite a large fraction of this population. And at the same time, there's an association, or there's the Association of Certified Fraud Examiners in the United States, but it's a global organization. And in their report to the nations on occupational fraud and abuse, which is also published on a bi-yearly basis, they estimated that the median loss of financial statement fraud is approximately nearly $1 million. And what is maybe more concerning is that the typical time between when a fraud begins and when it's detected is approximately 14 months. So there's quite a significant time duration between the start of a fraud scheme and its detection, maybe in an ERP system, maybe in an enterprise resource planning system. And that this topic is actually a continuing challenge. It's also quite evident in Germany, especially in the last year. We have a major fraud or accounting scandal ongoing, which is currently investigated, where one of our financial payment providers is missing an amount of nearly 2 billion US dollars, and it's still not clear how this happened. So it's currently investigated, but it's still a topic that is really driving forensics experts here in Europe, but especially also politics and a lot of other stakeholders that have been involved in this major accounting scandal or accounting fraud scandal that is currently investigated. And Wirecard, I mean, from one day kind of to the other filed for insolvency. So quite a challenge these days, and we see it's still an evident topic. And of course, it's usually associated, especially when you see these high volumes fraud cases with associated media echo. So this is what we see as well. At the same time, if we go back maybe to the last century, for example, we see a tremendous development in the recording and processing of financial accounting data. So if you, for example, think about the beginning of the last century, where maybe all the journal entries, all the organizational activities have been recorded manually, for example, in a so-called accounting journal by a human. Over the 1960s, where we saw all these, for example, IBM punch card systems emerging, which was the first step maybe towards a digitization of these transactions or business process steps that are evident in organizations, until, for example, the 1990s, roughly, where one of the major software providers, for example, like SAP, released kind of a fully fledged enterprise resource planning system that is really covering and also monitoring all the different business process activities that are happening in such an organization. And you could think of that, I mean, this evolution, or this maybe even revolution in terms of the recording and processing of organizational activities is associated with a significant increase in data volume. People nowadays use this term very often, referred to as big data, but in these systems, quite a lot of data is actually accumulated on a daily basis. And from a forensics or from a fraud detection perspective, this is quite an interesting area, especially these enterprise resource planning systems like SAP Financials, for example, or Oracle Financials, because nowadays you can basically say that almost every activity within an organization results somehow or in some kind of digital trace that is recorded by such systems. In fact, if you look at, for example, the yearly investor relationships fact sheet that is published by the SAP, they usually state something like our enterprise resource planning applications touch roughly 77% of the global transaction revenue. So there's quite a large fraction of transaction revenue that is covered or at least somehow touched by those systems. And therefore, these systems are a valuable source for information, especially when it comes to financial fraud detection or fighting economic crime, for example. Let's have a brief look or more in-depth look into those systems. If you look into ERP systems, you can somehow envision them in this kind of three-layer type of architecture. So usually on top, you have some kind of a business process that is ongoing in an organization or that's happening in an organization. And this business process is then somehow mapped into the accounting world, for example. So, for example, all the different business process steps or activities are mapped in a so-called general ledger or sub-ledger structure, so that at the end, all those business process activities can then be once they are recorded in this general ledger or sub-ledger structure, used to comprise a balance sheet and a profit and loss statement of such an organization. So this is the accounting world in those systems. But at the low level, at the very bottom of those systems, of course, these activities and also the mapping into the ledgers or the general ledger accounts, they are somehow stored in a database format or in designated database tables. Like, for example, here we see typical SAP database tables like the journal entry header table, BKPF, and also the journal entry segment table, like, for example, the BSEG. So this is really the storing and recording of all those individual process activities in regular database, tabular database tables in such systems. When having a look at an end user at such systems, we usually see something like this. So we see, for example, from a user interface perspective, a mask like this, where an accounting clerk, for example, can enter a certain posting to one of the general ledgers using such a mask here, where, for example, the accounts, the general ledger accounts, and also the subledger accounts that are the target of an entry in such an ERP systems are outlined, and the designated information of such a journal entry posting will be inserted in such a mask. And this is what we see here. So this is usually how it looks like from a user interface perspective. But if you look under the hood, and that's quite interesting for us forensic analysts, or us maybe forensic data nerds, if I'm allowed to say that, we usually see something like this. We see a very highly commingled database table landscape, where we have a lot of different database tables that have relationships with each other. So they are highly connected here. So this is one example of the SAP ISU, which is the industry solution of the SAP, for example, for energy providers. And we see there's this relationship of a lot of different database tables under the hood. When detecting fraud in such a highly complex database scheme world is quite a challenge, especially at the beginning, once you start to dive into this world. But it's also, it provides really the opportunity, once you understand all those interconnected and commingled database tables, to detect maybe something that wasn't as obvious as before, by maybe just having a look at the more higher level, the business process level, or at the general ledger account level, like it's usually done nowadays in financial statements audits. And if you think a little bit further, even further from a forensics perspective into this, there's one principle that I want to highlight, and this is the so-called Locard's exchange principle, which is one of the main principles in forensics. And the Locard's exchange principle says, whenever there's, for example, in the physical world, a crime scene, there is some kind of a trace transmission or a reciprocal trace transmission between the victim, the suspect, and the crime scene. And we usually see it, for example, if you think about these CSI series or movies in terms of fingerprints or maybe gunshot traces or fiber traces. So there's somehow a transmission between the different objects of such a crime scene. And this idea, this concept, this can also be transferred to a digital crime scene. And I think this is probably quite obvious. So we can think of, for example, if we think about a digital crime scene like an ERP system, there's also, or there must be also some kind of trace transmission between the victim, the suspect, and a digital crime scene, for example, the ERP system, where we maybe have a chance to detect those traces in some kind of server logs of the systems, maybe certain activity patterns that we see in such systems, or maybe file fragments if we maybe, for example, have a look into hard disks, hard drives, etc., that are associated to such a system. So it's very, very interesting, this domain from a forensics perspective. All right, with that, the question always remains, okay, what kind of traces, what are the things that we are actually trying to identify in such a system? What is it that we are interested at? If we look into the different transactions that are recorded in such systems, we can, for example, think about maybe using some kind of algorithm, for example, a principal component analysis, kind of a straightforward dimensionality reduction algorithm, and we can try to project all the individual attribute of such a journal entry into, for example, a two-dimensional feature space like we're doing here. And then we assume something like that the regular transactions or the regular journal entry postings that we see in such systems, they should somehow correspond to some kind of manifold in this two-dimensional space that we are projecting the data into. And we are keen and interested from a forensics perspective or from an internal audit perspective in detecting the anomalies or the outliers that deviate somehow from these regular transactions that we see in this two-dimensional feature space. And these anomalies that are far away from such a manifold, for example, maybe this is a two-dimensional Gaussian here in this two-dimensional feature space, these are the ones that we are usually referring to as global journal entry anomalies, because they are really far away from the regular activity patterns that we see in such systems. And very often when we are identifying those anomalies, they usually correspond to some kind, maybe some sub-processes that have been unknown in the data, maybe some reverse or cancellation postings, or maybe just erroneous postings or error transactions, but they're usually not very interesting from a forensics domain perspective, because perpetrators usually try to obfuscate their fraudulent behavior as much as possible. So if you want to do something fraudulent in such systems, you're trying to hide as good as you can or as close as possible to the regular postings that you see in such systems. And this is the thing that we usually refer to as local journal entry anomalies. So these are the ones that we are in particular interested in, because they are quite close actually to the regular activity patterns that we see in such systems. And if you think about it from a perspective of a fraudster, you really want to hide as much as you can in the regular transactions that are evident in such a system. Right. So this is what we are trying to detect. So this is what we are aiming for when applying advanced deep learning techniques, for example. We want to detect these local anomalies that look like irregular postings, but apparently they correspond to somehow to a fraudulent transaction. In the following, I will really focus on only focus on a particular part or a particular type of data that is recorded in such systems. And I want to focus today in the meetup really on the structured data side. So all the data that is recorded in such systems that correspond to structured data. So data that is regularly recorded in conventional database tables. One trend that we see, however, is that there is more and more also semi-structured data recorded in such systems. For example, contractual data or PDFs that are scanned of contractual documents. They are also nowadays more and more stored in such systems. And also, finally, we also see non-structured data recorded in such systems. For example, speech information or maybe video information that is also stored in such systems. But these two types of data, I will not focus on today in the meetup. We will really have a look into the structured data side, because this is really the majority of the data that is still nowadays recorded in such systems. All right, the question is, of course, we can now think about applying some techniques derived from generative modeling or deep learning onto the data that is recorded in such systems. But the question is always, okay, what is it that was done so far? What are the tools, techniques that are applied by auditors nowadays when, for example, conducting a financial statement audit, or, for example, conducting a forensic investigation in light of a particular fraudulent scenario? And you can basically think about the different approaches that are applied by auditors nowadays. These approaches are usually referred to as computer-assisted audit techniques, or CATs. And you can, for example, group those approaches into 4 different clusters. So a classical one are risk-based red flag queries. Then we have a couple of statistical analysis techniques that are applied. We have statistical sampling techniques. And in the last couple of years, there's one trend that we really see, especially in internal audit, for example, where people apply more and more business process mining tools and software in order to gain a higher transparency when having a look into those different business processes. So from a risk-based red flag queries perspective, usually what you do is you think about, for example, your business process. So here, this is a standard purchasing process, starting with the creation of the vendor master data, and then with the final payment at the end. And you will analyze this particular business process for certain risk areas. So, for example, the risk that there is maybe a chance of doing something fraudulent in such a business process or misusing this business process. And then you are thinking about, okay, how can we mitigate those risks by, for example, adding certain sensors to the business process. So this is usually what I like to say in terms of specific database filters or red flag queries, usually implemented maybe in SQL or ACL, where you, for example, check for things like, have there been postings or journal entries outside of regular office hours, outside of the regular working hours? Or was there, for example, a particular transaction where one of the employees was able to create, for example, the purchase order, the goods received, and also the invoice and the final payments. So, for example, a severe violation of the segregation of duties in such a process. Another thing that people apply a lot, and this is really interesting as well, are so-called statistical analysis techniques, where you have somehow maybe an intuition about a distribution of certain journal entry attributes. And then you analyze, for example, a particular journal entry attribute for the distribution that you see and compare it with the distribution that you maybe have envisioned based on prior experience. For example, having a look, is this distribution that you see for a particular attribute really confirming to the distribution that you thought of at the beginning? This is the univariate or one-dimensional case, but of course you can extend this easily to multivariate analysis, for example, of vendor invoices. This is something that we did also in the past, where we projected certain vendor invoice postings, for example, in a three-dimensional feature space using principal component analysis, and then analyzed these distributions that we see in this three-dimensional space for anomalies. So these are classical statistical analysis techniques. Then another area are so-called statistical sampling techniques. And here the idea is basically really to somehow sample from the data or sample transactions from the data that you are aiming to audit in order to obtain some kind of representative sampling. And all the samples that you are drawing them from the distribution will be then in detail analyzed. So for example, you're really trying to obtain a representative sample as an auditor from the data population, and then you investigate this representative sample in more detail by, for example, having a look into the associated documentation that corresponds to a particular journal entry that you have in the database. And last but not least, we see with this application of business process mining. And here, really the idea is, for example, to analyze a particular business process as a whole by having a look at the different event logs of individual activities of a business process and how these event logs form a certain business process. And then you are interested in for so-called business process deviations, for example, in terms of the activity flow that you see in such business processes, but also in terms of, for example, maybe from a time perspective, are there some bottlenecks? Are there some loopholes in the process? And maybe are there some segregation of duty violations when analyzing those business processes? So these are the four, maybe one of the major four pillars of computer-assisted audit techniques that are applied nowadays. And there's one challenge associated with all those different techniques. And this is something that we usually refer to as so-called handcrafted feature engineering, or the application of handcrafted rules. So in most of the concepts or most of the computer-assisted audit techniques nowadays, they still rely on those handcrafted rules. So we need to, for example, really define those SQL queries and code them accordingly, and then we try to detect fraudulent activities that are captured or filtered by those, for example, handcrafted rules that we encode as SQL queries. And this was something that I did a lot, especially when I worked as a forensic data analyst. But even, for example, if you would apply more statistical analysis techniques, for example, like the principal component analysis technique that I just showed, very often in the past, there was the question about, because also of computational limitations, what are suitable handcrafted features, for example, in order to detect fraudulent activities in such data. But since we are here in the Hong Kong machine learning group, I mean, we all have experience in the last couple of years this tremendous shift in machine learning, and especially in deep learning. And this is something that is really interesting. That's something that was really motivating me to go back to research and think about, okay, how can we apply the promise of deep machine learning where we don't do this handcrafted feature engineering anymore. So we are not spending hours and hours and thinking about what are suitable features that should be extracted off an image, for example, or off a transaction to detect fraud anymore. I mean, what's really attractive for us also from a forensics perspective is this whole concept of end-to-end learning, where we can really end-to-end learn nowadays features or extract features from a particular data piece, and not only features that are at a certain hierarchical level, but we can really think about it in terms of a low-level feature extraction, mid-level feature extraction, and many, many layers of features in terms of the neural network layers. And then once these features are learned, we can use these features for particular downstream tasks, like, for example, the detection of fraudulent transactions in ERP data. So this is what we're aiming for. And this is really what drives us here at the university nowadays. Can we develop such deep learning-based techniques and train them end-to-end in order to detect, for example, fraudulent transactions? And if you think about the forensic data analysis environment or domain, and you think about it in terms of what type of machine learning should we apply to this task of, for example, the detection of fraudulent transactions, you could think about this in terms of supervised learning, or you can think about this in terms of unsupervised learning, right? And what we are interested in from a forensics perspective, we usually try to work in this unsupervised regime, because for us, it's very often interesting to really detect so far unknown patterns of fraudulent transactions. So to say the known unknowns or the black swan moments that we see in such data sets. So this is really what's driving us nowadays when detecting those novel fraudulent patterns. And I think this is quite clear if you have a look at the challenge of making AI work in the context, for example, of internal audit. We are very often facing a situation that learning a decision boundary in a supervised learning setup, where we're trying to separate maybe regular transactions from fraudulent transactions, isn't really the way to go forward for, because maybe there might be an unknown fraud pattern in the training data that we are not aware of. And if we are training these machine learning models in a supervised setup, it might be associated with a high chance of missing maybe this unknown fraud pattern. And this holds also even more if you think about it from a timing perspective or from a time perspective. Maybe there's a new fraud pattern emerging in the data, which we haven't seen in the past at all. And it wasn't evident in the data at this very moment when we trained our classifier using the training data. But at inference time, it occurs. So something like a 0-day fraud pattern. Then this is also, I mean, this whole idea of supervised machine learning in this domain is probably not the way to go from a forensics perspective. So we ask ourselves, we want to combine these two things. We want to apply this feature learning opportunity that deep machine learning provides, and we want to combine unsupervised machine learning. And we ask ourselves the question, what would be a suitable architecture from a deep learning perspective to apply in that context or in that domain? And one of the architectures that's quite evident, and I think it's used nowadays quite a lot, are so-called autoencoder neural networks. And this is a very, very interesting architecture. And I will dive into this a little bit in a second, then hopefully provide you some intuition into it. And then we will have a look at some nuances of this architecture that can be used for certain downstream audit tasks. So this is the next couple of maybe half an hour of my talk today. So let's have a look into autoencoder neural networks. Autoencoder neural networks are quite interesting because they are basically two neural networks chained together, as we see here. So we have one neural network, which is referred to as encoder network. And this encoder network learns a so-called nonlinear signal compression. So we feed in some data and we're learning somehow to compress the information, the different patterns, the different signals that are evident in the original data in a nonlinear way into a lower dimensional space. And then we have a so-called decoder network that is taking these lower dimensional features that we have been able to learn using the encoder network and is trying to conduct a nonlinear signal decompression in order to reconstruct the original data that we've fed into the encoder network. And these two neural networks are chained together in a way that they form this kind of butterfly architecture. So we see this as maybe a little bit butterfly. You can think about this architecture in terms of a little butterfly. And we have here a lower dimensional space. So this is our bottleneck layer. So this is our encoding layer, where all the individual informations that we are learning when training this neural network need to be compressed into this lower dimensional space. And based on this lower dimensional representation, we are trying to reconstruct the original data again. And this is something that can be applied quite nicely to journal entries or transactions that you usually see in an ERP database, for example. And this is what we did. So what we are aiming for is actually in an unsupervised learning setup, we want to train this autoencoder neural network in a way that we feed in journal entries. And we are trying with progressing training to reconstruct the majority of the journal entries that we fed through the autoencoder neural network architecture to the best extent possible. So we want to really learn over time a lower dimensional representation of the data that allows us to reconstruct the majority of the journal entries, maybe nearly all of them perfectly, without any reconstruction error, which we are measuring here. So this is what we're aiming for. This is really what we want to learn. And once we trained this neural network for maybe a couple of hundred, maybe 1,000 training epochs, it learns over time really to reconstruct the majority of the journal entries. And once we say, okay, now our training loss or our training error started to converge, we'll stop the training and we will feed all the journal entries that we had in the training data once more through the autoencoder neural network. And then we will have a look at the ones that haven't been reconstructed correctly. Because those journal entries that the autoencoder wasn't able to reconstruct, even after maybe 100 or 1,000 training iterations or training epochs, these are the ones that must contain some kind of unusual signal, some kind of weak signal that is evident in the original data. And the autoencoder wasn't able to learn because it needed to learn only a lower dimensional representation of the strong signals that are evident in the data. And this is what we did in terms of detecting unusual transactions in ERP data. We tried this with two data sets. So these were two data sets supplied at that point in time by my former employee. The first data set corresponded to nearly 300,000 journal entry line item postings. And we also, from the client side at that particular project, received already 55 pre-flagged global anomalies and 40 pre-flagged local anomalies. And we had another data set corresponding to roughly 73,000 posting line items. And here we also had a very small amount of already pre-flagged global anomalies and local anomalies. But we see here it's really an anomaly detection task because we have this highly unbalanced class distributions here. So let's have a look at the result for the first data set. So this is what we see here. So here we see the result in terms of reconstruction error on the y-axis for each individual transaction on the x-axis. So here are the 300,000 journal entry line items, and here's the reconstruction error of the 300,000 journal entry line items after 10 training epochs. And what we see already is quite interesting. We see that the global anomalies that have been pre-flagged, they really correspond to a high reconstruction error, while the local anomalies and the regular postings, they correspond to a somewhat lower reconstruction error. This is what we see here. And then with progressing training, with more and more trainings iterations, quite nicely we see that the global anomalies, they still remained in this high reconstruction error regime. The regular posting, they correspond to a quite low reconstruction error. So they correspond to the main signals or main patterns that are evident in the data. And therefore, the autoencoder neural network was able to learn these lower dimensional manifolds or representations. And we see also these local anomalies that are somehow scattering out here that have a little bit higher reconstruction error than the regular journal entries. And one thing that was quite interesting here for the client in particular was that we see already a couple of regular transactions here that haven't been pre-flagged by the client at that particular point. So here, these bluish ones, and they still corresponded to a somewhat higher reconstruction error. And those were quite interesting from a forensic investigation. That's at least what I can say about this particular project. So we have been able to find additional anomalies in the data that then went under a more detailed investigation by the forensic accounting team at that particular point. That was quite interesting. All right, this was one of the first steps toward the direction of the application of unsupervised deep machine learning to financial fraud detection in that particular scenario. There was one thing that was really interesting for us when starting to dive into this domain even further, and this is something that I really want to show you, is we also had a look in addition to just the reconstruction error, also into the latent neuron activity. So basically, we had a look into how are different or certain transactions behave in this latent space here, in this lower dimensional manifold or embedding space, as you wish, in this autoencoder neural network. And what I want to show you in the next slide is one example of such a lower dimensional space. So what we see here in particular is we trained a very, very shallow autoencoder neural network, and we just allowed the autoencoder neural network to have two neurons in the bottleneck layer. So just a two-dimensional embedding space. And what we are visualizing here is actually and call it accordingly, are the different features, the different attributes of all the individual transactions in this data set. And maybe let me start the video in the meantime. What we see with progressing training is quite interesting. In the first couple of training epochs, the autoencoder neural networks really learns to separate the majority of the data from the global anomalies. And with progressing training, also quite nicely, what we see is it also learns to very nicely cluster the different characteristics of all the individual journal entries in this two-dimensional latent space. So we see here, for example, in this very shallow autoencoder learning setup, that a certain amount of high-level features, of high-level embeddings have been learned in this lower dimensional latent space by the autoencoder neural network. And even more interesting, once we increased the dimensionality of the autoencoder neural network, so this is a very deep autoencoder neural network, and the same learning effect by, again, using just a two-dimensional manifold or lower dimensional latent space in the autoencoder neural network architecture setup, we see that the autoencoder neural network is really learning a very granular representation, a very fine-grained representation of all the individual journal attributes, values in this two-dimensional feature space. So this was quite interesting for us at the beginning, once we started to investigate this. And therefore, we asked us the question, and this is something that I showed you already very briefly before, is how does this behave in terms of the anomalies that we are trying to detect? And this was quite interesting to see. So this is another experiment that we conducted where we just, in a autoencoder architectural setup where we had 3 neurons in the bottleneck layer, we visualized, for example, the activity pattern for all the transactions that the autoencoder was trained with. And with progressing training, we really see that the anomalies, which are these red, especially the local global anomalies, which are these red points here in this 3-dimensional space, they try to scatter out from the regular transactions with progressing training. So this was quite interesting to us to see. This was one of the first steps towards, because it gave us some intuition about maybe there's something that we can do in this latent autoencoder space in order to detect accounting anomalies. And this is one final result, for example, after the network training convergence. So we see, for example, here in this three-dimensional bottleneck space, that the global anomalies, they nicely scatter away from the manifolds that we see here of the regular postings that are evident in this ERP data. And yeah, this is what we saw here in this latent space. So we ask ourselves, wait a second, maybe let's step a little bit back and think about what we can do in this latent space in order to detect accounting anomalies. Or maybe there's something also from a theoretical perspective that underpins this observation at that particular point when we started to dive into the detection of anomalies in that particular space. And if you think about the setup that we just discussed or that we just saw, we can think about these ideas also from a generative modeling perspective. Or if we have a look into or revisit variational inference, then it's quite interesting to interpret this setup from a variational inference perspective. So what we're having actually in our accounting data is we have somehow some latent generative factors which are unobservable, which is from the variational inference usually referred to as the true posterior, over those latent generative factors, over those latent generative variables. And all those individual latent generative factors, they generate journal entries or postings in our ERP systems. So these are the real world observations that are directly observable. This is the evidence that we see in the system, in the ERP system. And a function that is mapping all those generative factors towards these real-world observations is usually referred as the likelihood. So this is what we see usually also. These are the journal entries that are generated in a real world. And we know that there must be somehow some one-to-many relationship between those generative factors and the journal entries that are generated in such systems, right? And the question is then, especially in variational inference, can we somehow learn an approximate posterior distribution over those latent generative factors, over those latent generative variables that describe those latent generative factors, right? So this is one of the ideas of this generative modeling, right? So because can we somehow approximate these unobservable probability density, the true posterior, by an approximation? This is what we are trying to learn, or this is what we are aiming for. Because we don't have maybe just a single true posterior or a posterior for a single generative factor. We have it most probably also over a lot of different business process activities that are generating all those journal entries in such an ERP system. And if you think about this a little bit bigger, so what you're having basically in such ERP system from a generative modeling perspective is that we have all those different business processes, departments in such an organization, and all those departments, they serve as latent generative processes, constantly generating transactions in such a system. And vice versa on the other side, for example, the IT department, the HR department, or treasury department of an organization. So the question is, can we somehow approximate or uncover those unknown probability densities? Well, I mean, we all know in the meantime, this is very close, or this is one of the main ideas of the very famous paper of autoencoding variational base, right? Where we have the variational autoencoder, and we somehow want to learn in this autoencoder setup the parameters of a prior distribution in this latent space that then corresponds to a continuous approximate posterior over this latent generative factors. And we're doing this by, first of all, we're trying to minimize the reconstruction error of the autoencoder neural network, but at the same time, we also want to minimize the KL divergence between an arbitrary prior, maybe a standard Gaussian distribution, and the approximation that we're trying to learn here in this latent space. And if you think about this latent space, for example, in a way that you assume maybe there's a mixture of two Gaussians in this latent space, what we want to achieve from an accounting perspective is that maybe one of those Gaussians corresponds to all the accounts receivable postings, and one of those Gaussians corresponds to all the accounts payables postings. So this is what we're aiming for. The question is, however, I mean, we know that we have a lot of these different latent generative processes, especially in ERP systems, where we have all those different business processes that generate those journal entries in the latent space. Can we somehow learn also more complex priors, or at least approximate the latent generative factors by more complex priors? And one of the challenges of the standard variational autoencoder is that since we are trying to compute a KL divergence between our approximation and the prior that we want to impose in this latent space, we need to somehow have an exact functional form that describes this prior distribution, because otherwise we won't be able to estimate the parameters of this prior that we're trying to impose in this latent space. So this is one of the challenges, especially once you're trying to learn maybe more complex priors or approximations. And one solution to this challenge was a very nice approach developed by Alireza Makasani in 2015, and that was the idea of the so-called adversarial autoencoder neural network. And the adversarial autoencoder network is a very interesting architecture. Basically, what you have is you have a standard autoencoder here that tries to learn to reconstruct its input as best as possible. But then you have attached on top of the latent space also a discriminator network that is trying to learn constantly a separation of the samples that it's provided to, and wants to learn to separate if the sample that was fed into the discriminator network comes from the embedding space of the autoencoder or the bottleneck space of the autoencoder, or from an arbitrary prior distribution that we selected at the beginning. And the advantage here is really that we don't have this, there's no need to have a closed form distribution, prior distribution, and we are not learning the parameters of this closed form prior distribution as in the variation autoencoder setup. We just need a distribution that we can sample from. And this is relaxing this constraint that the variation autoencoder has quite significantly. So the adversarial autoencoder is trained in a two-way training setups. The first one is a so-called reconstruction phase. So this is the standard autoencoder training phase, where we just feed in the input journal entries and we try to reconstruct them as good as possible. But then we have a so-called regularization phase. And this regularization phase is quite interesting because here we are using the encoder net of the autoencoder neural network also as a generator to produce a latent space representation that is hopefully as close as possible to our prior distribution that we are trying to enforce here in this latent space here. And once this is working, so once the generator net or the encoder of the adversarial autoencoder will be able here in the latent space to mimic this prior distribution that we chose up front, it will maximally confuse the discriminator network. So the discriminator network will not be able anymore to distinguish if the sample that we just draw and fed into the discriminator network came from the bottleneck of the autoencoder, or it came from the prior distribution that we are trying to enforce. And this is what we are aiming for. This is what we want to achieve. We want to confuse the discriminator network as much as we can. And at convergence, what's happening then is that these two probability densities, the probability density that we see in the bottleneck and the prior distribution, they must become as similar as possible in order to confuse the discriminator net to the utmost extent. So this is what we are aiming for. And this is something that can be shown as well. So here, just a few examples. So we tried this, for example, with a mixture of different Gaussians. We see, for example, simple distributions like a mixture of 3 Gaussians. They can be learned quite fast in the latent space. Mixture of Gaussians usually takes a little bit longer until convergence. And here, for example, is a mixture of 10 Gaussians in the latent space. And we see even after, for example, 2,000, maybe 3,000 training epochs, it's still not converging, but it will converge ultimately at the end, but it takes significantly more training time. But once we have this latent space representation and we learn them accordingly in our latent space, it's quite interesting then to investigate all the individual manifolds, all the different high density regions that we have been able to learn in the latent space. And you can think about this in terms of a deep clustering that we are applying onto the different journal entries here in the latent space. So this is, for example, one result after training the autoencoder neural network, adversarial autoencoder neural network for 2000 training epochs. And there were two quite interesting observations. First of all, of course, we have been able to impose this prior here in the latent space. We also see that the global anomalies, they try to hide somehow in these low density regions of the latent space. So they are significantly deviating from the high density of the prior distribution. And at the same time, the local anomalies, they are inside of the high density regions. But since they are inside of the high density regions, they correspond ultimately to a higher reconstruction error of the decoder network of the adversarial autoencoder. And we use these two properties in addition as well for anomaly detection. So now we can distinguish global anomalies and local anomalies either on their position in the latent space or on the magnitude of reconstruction error of the adversarial autoencoder neural network. The other thing that was quite interesting, and I'm speeding up a little bit in the interest of time, is that, I mean, once you start to investigate, for example, the individual manifolds that you've been able to learn here in the latent space, you see quite nicely the effect that I just mentioned, that there is somehow this semantic clustering of all the individual journal entries, all the individual transactions evident in the latent space. And if you go back to the original transactions based on the encodings here, you see that, for example, these individual journal entries, they have been clustered quite nicely. And even more, you can put this into an extreme setup, for example, where you say, I want to learn a prior distribution corresponding to, for example, a mixture of 25 Gaussians, learn a very nice nonlinear clustering here in the latent space, and then investigate even certain attributes of the journal entries, for example, the posting amount. And you see, for example, once you move along a certain trajectory in the latent space, for example, you see that the posting amount of a certain journal entry starts to increase while walking, for example, into set one direction from one area of the latent space to another. So walking from here to here in the latent space will increase, for example, the invoice posting amount. So we thought, okay, this is quite interesting. What can we do maybe to relax this assumption of this prior distribution, this strong assumption of a certain prior distribution even further, in terms of, can we use this approach also to learn a representative audit sample so that our auditors ultimately at the end can get maybe a sample of 25 or 100 journal entries that we can provide them and tell them, if you look at those samples at this, or if you look at the population of this number of samples, you have a very, very representative sample of all the transactions that are evident in such a system. And one of the ideas that we recently tried is the idea of vector quantized variational autoencoders, where we, in addition to these manifolds, or these high density regions, also want to learn a quantized representation that represents as good as possible, for example, all journal entries that are so associated to a particular high density region in this latent space. And this is the idea of vector quantized variational autoencoders, was introduced by Aaron van den Oort and Oriol Vinyals at DeepMind 2017. And the idea basically here is to deploy a certain set of quantizations in the embedding space, so-called codebook vectors. And over time, what we are trying to learn is that those quantizations correspond to the actual data manifolds that we learn in the latent space, and then represent the data that we have in the original data set quite nicely. So we tried this in one of our latest papers. We used two publicly available data sets. We used all the city payments of the city of Philadelphia in 2017, and also all the city payments of the city of Chicago from 2096 until 2020, and trained the vector quantized variation autoencoder to learn an optimal sample for these particular payments. And just very briefly also show you some visualization. So here we see again a similar visualization as we saw before. I will start the training process in a second, so to say, visually. There are certain red dots here in this latent space, and these are these vector quantizations or the codebook of the VQ, and they should correspond to a representative sample of all the individual embeddings that we are seeing in the latent space with progress and training. So we see this in a second. We have a warm-up number of epochs of 50 epochs usually, and then now we see the embeddings, they start to spread out and represent all the different manifolds even further here in a latent space. And we see, if I would select, for example, just the red embeddings, just those quantizations, I will ultimately have a representative sample of the data points that I have in my journal entry population. All right, so this is the idea of the vector quantized variational autoencoder. So here we see another example where we select an audit sample size of 128 samples. We also see quite nicely that certain attributes, characteristics of the journal entries, they vary quite nicely in terms of different regions here in the latent space. Also, just very briefly, one example. So this is, for example, a quantization that we learned of the City of Philadelphia data set, and we used the code book of 128 vector quantizations. We had a look at the representative audit sample that was learned. So here we see the characteristics of the representative sample, and we see also quite nicely the underlying, all the other journal entries or payment transactions here that correspond to this representative sample. So this provides auditors the ability to learn now a representative audit sampling on a large scale ERP dataset, for example. All right, so this is the sampling. Another idea that we also developed even further, or this was one of the things that we also asked ourselves, can we use this also in a way, so for example, that we can generate so-called deepfake accounting data. And this is the whole idea, I mean, the original idea of this generative modeling. I mean, once you have learned such a latent representation and all these manifolds, right, in latent space, what's happening if we are, for example, sampling or draw a random sample in this latent space, feed it through the decoder neural network, will it produce a realistically looking journal entry? So we will move away the encoder part. We also remove away, for example, the discriminator network from the adversarial autoencoder. We just take the latent space, draw a random sample, feed the random sample through the decoder network, and generate a journal entry. And we all know, I mean, there are very nice examples out there, right, where you can do some kind of arithmetic in this latent space. So for example, we can even traverse from one manifold here in this latent space to another manifold here in the latent space. And we will probably start, for example, by this transaction here, by all those attributes that we see here. These are highly anonymized for visualization purposes here, but we see once we are working along this trajectory here in the latent space, we can generate all these intermediate journal entries until we reach the other manifold. And we see this very nice transition from one transaction to another, and all these intermediate transactions that look quite similar. We can also use this now to generate artificial local and global anomalies. So this was also quite interesting for us by, for example, just sampling around a certain manifold. So we could produce more local anomalies or more global anomalies, which helps us a lot these days to make our, especially an anomaly detection approach using the autoencoder neural networks a little bit more robust against potential black swan moments or zero-day fraudulent patterns. So this is quite interesting for us. Another thing is that we ask ourselves, okay, can we put this to an extreme? And we envisioned a threat scenario, which is, I think, still very far away in the future. But nevertheless, we asked ourselves, is this a potential threat, or is that something that's interesting? So we assume, for example, let's assume we have an ERP system in an organization. We will conduct a regular data extract, or we are extracting all the data, for example, of a particular company code of such a system. So we have all the journal entries. We train a deep model, similarly to what we just saw, for example, use an autoencoder neural network. And then once we have this deep model, can we adversarially sample journal entries that will then maybe be injected into the system again, or maybe just be provided to an auditor. So this adversarial journal entries with the regular journal entries will then provide it to the auditor. And will, for example, a potential auditor, as I was in the past, for example, be able to detect those adversarial journal entries in the dataset. That was the question that we asked for. So we developed some kind of first approach to do this. So first of all, what we did is, for example, we really investigated in detail certain attribute characteristics in the latent space and how they behave, for example, in this two-dimensional space. And then we also had a look into the regions where, for example, the discriminator would be could very simply detect regions if we would sample from such regions. So for example, what we see here, if we would be sampling here from this low density region, the discriminator neural network of the adversarial autoencoder would immediately detect that, okay, this is probably a journal entry that you just sampled, which is quite easy to be detected by an auditor. And using these two characteristics, first of all, okay, how do certain attributes behave in this latent space? And also, where should we sample to hide our sampling as good as we can? We see, for example, these adversarial sampling regions by just overlaying these two distributions here. And this is the region most probably that you can quite safely sample from to generate journal entries that look very, very similar to regular journal entries that you have in the original data set. And this concludes and comes to my last slide for today is, so we asked ourselves, okay, can we use this to develop some first adversarial accounting attacks? This is what we asked ourselves for. So one attack that we asked about, okay, could we, for example, replace a certain journal entry in the data set, for example, a circumvention of an approval border in the data by just generating adversarially generated journal entries that just split, for example, this amount that we see here in this transactions very nicely in an unsuspicious way. And the other idea was, for example, can we apply an attack which we refer to as accounting anomaly augmentation, where we see maybe a very, very isolated transaction that is quite unusual in the data set. And we can generate some noise, additional journal entries or transactions in the data set, so that this individual instance here in our data set doesn't look suspicious anymore. And therefore, all these regular rule-based computer-assisted audit techniques wouldn't be able to detect it in a way as they are trying to detect it now. We are now even further in our research in that area. We are now able really, if we have a certain profit and loss statement and a balance sheet, to generate a lot of journal entries for a certain fiscal year that is really mimicking the balance sheet and the profit and loss statement. And we see this as a very interesting, maybe a potential threat in the future for auditors. All right, I think that's it from my side. Sorry for taking a little bit too much time. I hope it was interesting for most of you. If there are some questions, please don't hesitate to raise them now. Otherwise, don't hesitate to write me an email or visit our website. And yeah, looking forward to enter collaborations or potential discussions. Thank you very much.